Hi, Sarah.
Hi, Gaurav. How are you?
I'm good, thanks. How are you?
Yes, very good. Thank you. Thanks so much for joining us today. I know it's really late at night for you. So we're just waiting for a couple of people still to pop up, but we'll get started. So really excited to have you speaking with us today. So for those that don't know, my name's Sarah and I'm one of the partners at Think&Grow. So I'm going to be hosting the webinar this afternoon. The outcome of this session is going to be how to discuss and build our companies for the future. So we're hearing about many businesses around the world that are experiencing time of economic hardship and a lot of uncertainty. And so we're really thankful that we've got Gaurav here who's offered us his time to work through how to get unstuck and see that there is a lot of opportunity still out there to grow your business with minimal cost, time, or resources. Just for general housekeeping, there is a box at the bottom, a chat box, as well as you can wave to us as well. We want this session to be as interactive as possible. So please shout out any questions that you do have as we go, and we'll be sure to be covering it off throughout the discussion. Cool. So I'll hand it over to you, Gaurav, just to do a quick introduction for those that don't know you, and you can give us a little bit more insight into who you are and your background.
Thanks, Sarah. First of all, thank you so much for having me. It's always a pleasure to chat with fellow entrepreneurs and share about some of the things I've learned. So thanks for having me. Apologies for my sleepy looks. It's 11 p.m. here, so there's only as much uh, energy as I have left. But I'm actually quite excited. This is one of the things I like to do quite a bit. So thanks for having me. A quick intro about me. So I began my career in investment banking, global trading. What you realize about global trading when I look back is effectively I was essentially managing assets, and growth is a lot about trying to manage different opportunities that have a reward in the future, and there's a risk associated with it. So a lot of what I practice in growth, I picked it up back in my investment banking job. So did that, then moved on the product side, worked for a company that came out of MIT Media Lab, specifically focused on customer development quite a lot. And then more recently, I was the SVP of Growth and Strategy at Molecule. It's a hardware company that's trying to commercialize cutting edge air purification technology. And I was one of the founding team members, employee number one, grew the business from 0 to 9 figures. And then after a great ride there for about 4.5 years, more recently, I am currently working for a fintech company that's at the growth stage. So the company is called Freedom Financial, and it's in the consumer lending space. So a space that's very relevant to what's happening right now. But all in all, I guess I'm really passionate about building sustainable and scalable businesses, and hence I really enjoy the growth world. So that's a little bit about me.
Great, amazing. So, Gaurav, I think myself and everyone else would love to hear, what's happening with startups in San Francisco and what are they doing to weather the storm at the moment? What are you hearing on the ground?
Yeah, I think it's evolving so rapidly. Early, it's quite disappointing how North America, particularly US, has handled the situation. First, they saw it coming, but they did not act fast enough. In fact, I would say some of the developing countries have done a better job of moving quickly. So we were not prepared, and that's why we are seeing second degree and third degree order of failures happening right now. So in the startup land, right, what I am finding is there are a few startups whose demand has actually increased because of what's happening right now. These are startups that are, how can you entertain yourself while you are within your home? So things that allow you to stay fit in your homes, things that allow you to stay entertained within your homes, e-commerce. A lot of these in-home concepts have actually have actually seen a boost, like almost 100% lift. Then there are some other companies that have completely had to shut business because they had some amount of physical operations involved. So what I'm not seeing is it's a binary outcome. Either companies are completely laying low or companies are actually taking advantage of the situation. And then there's no middle outcome. Like no one's business is good enough right now. It's either not happening or it's happening in full swing. And then in the middle, there's a bunch of entrepreneurs and bunch of builders who are using this time to actually focus on what would happen next once this entire wave ends. So really the situation is evolving, but these are the three buckets in which I would put the different startups that are out there.
Great. And so, what would your advice be for? I mean, it would be good to categorize it, but businesses that have the money to spend from a marketing perspective versus businesses that don't, how they can still both be thinking about growth.
Yeah, so a lot comes down to like how you define growth, right? And in my experience, the way in which I have looked at growth is there's so many definitions out there. Uh, Everyone has their own way of defining growth. But in my view, you take the entire customer life cycle. So growth begins from the first touch point you have with the customer. So so acquisition, brand marketing, people coming into your funnel. So that's engagement, conversion, activation, however you want to call it. So how do people know about you? Then how do you convert? How do you engage them and convert them? Once they have bought your goods or your services, how do you continue to engage them and get them to buy more? So you can call that retention, you can call that recurring revenue, however you want to call it, right? Engagement and retention is the next piece. And then there is customer loyalty and customer advocacy, which is often not thought about as a core growth metric. But advocacy is also important because happy customers, the only channel that's going to scale in the future, 10 years into the business, is word of mouth. That decides if your business would stay or not. So advocacy is important as well. So you need to be looking at growth from awareness, engagement, conversion, retention, and advocacy. And yes, it's a bad time to acquire new customers, for example, because you may have the money, you may not have the money. But you should be really looking at your entire funnel and finding opportunities where you could dial in the levers that were not dialed in before. One of the things I've seen, startups that are, and I've been guilty of this, startups that are using paid marketing to deliver growth, they're often too addicted to the idea of paid marketing because the return on ad spend is immediate. You spend $1, you get $2 back. So it's almost, it makes it very difficult for you to zoom out and focus on what are some of the other levers out there that are non-linear in terms of ROI. What do I mean by that, right? Paid marketing by default is always going to be linear. You pay $1, you get $2 back, and you keep scaling, and at some point you lose efficiency and your performance dips. Organic marketing, on the other hand, that's a catch-all bucket for content, advocacy, referral programs. Some of these forms of marketing or some of these forms of building your business give you a non-linear ROI. You keep on going at it, and at some point you see that for every extra dollar you spend, your ROAS ends up hitting a curve. That's where the slope is increasing, and that's how you hit your hockey stick. You never hit your hockey stick based on paid marketing. So this is the time to focus on other aspects of your business that is beyond just buying media or buying traffic. So that could be conversion. What are you doing in the engagement funnel to engage your users? Uh, a lot of this time is also very crucial for you to go engage your community. So what are you doing with regards to engaging your current community? And so there's a lot of opportunity here when you look at your growth across the entire funnel. And yes, you don't have the money to spend on marketing, but what are some of the other things you can do across the funnel, ranging from product, community, to of course your how you show up, conversion, all of that stuff. It's time to find those opportunities and then focus on them.
Yeah,
I can get into more specific if
yeah.
as needed.
Case studies from you. Do you have any examples of some businesses in the Valley that haven't had the ability to spend but are still seeing growth?
What I've seen is I'm really surprised uh, by the ability of a few entrepreneurs here to just pivot drastically based on, or it's not like a full 90-degree pivot, but so I'll give an example, right? There's a company called Alto Pharmacy. They're in the business of delivering prescription drugs to your home, and their key vertical is fertility drugs. And because of everything COVID related right now, fertility treatment is on no one's mind. So they are moving really fast and getting into the wellness and the sanit and think think about all the medicinal needs and all the pharma needs around COVID. So sanitizers, masks, they're getting into those items and they're trying to deliver those items. So they were very quick to launch a COVID kit and they're getting that to people very quickly. So that's a pivot, but that pivot really allowed them to leverage their infrastructure that they have built and be appropriate to what's happening right now.
Yeah.
Yeah.
You mentioned about engaging with your community again as a way that's not necessarily looking at spend, but using the audience that you already have or customer base. Do you have an example of that where that's done really well that people could maybe use in their own businesses now?
Yeah, when I say that, I just don't mean sending an email, because the number of emails I have received from my shoe company that, hey, we are handling COVID like this. Now, it's not about spamming people, but doing something that's, so I think you can bucket that in a few different ways. You can do something that's helpful and relevant to the community if you can, right? So if you happen to be a product like, say, a company in the financial lending space, maybe you could do something around how individuals can handle financial situations, and you can drive financial literacy that's aligned with your mission. So there's of course a lot of opportunity to do things like that. One of the case studies that come to this is also, by the way, a time to go to be vulnerable and go to your community and ask for help if you need help. And one of the companies here, it's a small business, I won't call it a startup, but they make, the company is called Paper Anniversary. They make gifts for people across, for different anniversaries. And one of the things they've done really well is they were about to go out of business because no one is thinking about gift buying right now. But the founder posted a very heartfelt message and reached out to people on social media and her entire mailing list, asking them to buy gift cards that people could use for the next 10 years. And she threw in a discount, and things like, you buy 2 gift cards, you get one free. But she opened up with vulnerability, reached out to her community, and she was able to pre-book revenue for the next 3 months. Even if that revenue is not being used, the cash is still in, and that allowed her to keep her business afloat among everything that's happening right now. So community can be a very powerful tool to be relevant, to engage, but then also really seek out help and get help.
Great. And just a reminder to our audience that's listening in, please feel free to ask any questions as they come up, and we'll be sure to try and cover it in this conversation. So wanted to go on to the next chapter, which is about working through your process to find new opportunities. So with your experience, what people can be doing and how they can be thinking about their product or wherever they sit within the organization to try and achieve even little growth, basically.
Yeah, I guess each product is different, right? And there's a lot of context that's needed to figure out. I don't think there's a universal process. Each product has its own context. Now, having said that, right, there are still some themes and some topics that are more relevant today than they were a few weeks ago. And I think what's the first step in the playbook is to try and find what are some of those themes that are relevant to your business area, and see if there's an increase in engagement in those themes and in those topics. So the tool that I use to figure out such spikes is actually Google Trends, or really Google search data. Google Trends is just a very easy way. But first you'll have to unlock your phone. That's my phone. That's Google paying attention to everything. But really, Google Trends is a very powerful tool. For example, if you go and if you search food delivery, you would see a spike. You would see a spike that people are searching for food delivery right now. And the increase in that search volume is very massive than what it was before. So maybe begin there. Look at all the different keyword buckets your product falls in. Like, are you making remote work easier, or are you delivering something, or are you a booking platform? Like, try and find. So see if you're in an event booking platform, right? What are all the different topics that you can think of that your product could solve? How do you find those topics? One of the hacks I've often used is, by the way, this is extremely tactical, may or may not work for your industry, but choose some of the big competitors that are out there load them on Google, load them on a search engine tool such as SEMrush or Moz, load the URL on one of these tools, get all the keywords that a website is indexing for. And the reason you choose a big competitor is so that you have the widest range of keywords that's available. And then what you do is look what, based on the keywords that you find, right, which keywords are relevant to you, and then go and see if there's a trend where you're seeing that some keywords are actually spiking up. If that is the case, based on the keywords or the topics that you're finding, you should think about, can you do a product pivot or a product extension that is relevant to that topic? Or can you do a PR activity around it because there's heightened awareness? And if you are relevant to that topic, you should be trying to figure out how can you get covered in press, or how can you do something that community would get excited about. So also a great time for you to produce content that can directly serve your community and drive engagement. But I think it's really important to find topics that you could be relevant around and topics that are actively talked about right now.
We do have a question that's come in. So it's basically that the immediate result of paid marketing is linear, but what if the customers you obtain through this spread the word? Doesn't this become exponential?
Sorry, can you repeat that again? I missed the
So
last
the
part.
immediate result of paid marketing is linear. What if customers you obtain through this process spread the word? Doesn't this become exponential?
It absolutely does. So what makes your acquisition exponential is not paid marketing, but it's customer, is, as I was saying, it's customer retention and advocacy. So now is the time perhaps to build the engine and the system that allows you to run referral programs, that allows you to deliver a great customer service, that people talk about your service. In fact, there's a book. We used to do small workshops around this at Molecule. The book is called Word of Mouth Marketing. It's a 100-page book. There's an institute called Word of Mouth Marketing Institute, and it's all focused on how do you drive word of mouth activity. And it's built around the premise that if you can surprise and delight your customers and over deliver on the promise you have made, everyone loves to come up. And if you can equip people with some sort of an information or some sort of an experience that is beyond expectation, they will go and talk about it because it's an innate human desire to boast about something unique that we have discovered and our friends haven't. So the what makes your paid marketing, or what would give you that exponential growth, is not paid marketing, but really that word of mouth, customer advocacy, customer retention. So it's a great time to focus on those things. Deploy the CRM solution you wanted to deploy, a cross-channel communication, deploy a tool that allows you to talk to customers and engage customers in a unified view across email, website, app, and so on. So focus on driving some good core engagement, driving up your NPS, and then driving advocacy.
Great. And so just in terms of looking, how we go ahead about building for the future and how you see growth changing, especially with today's climate and what's happening and where we're going with it, what do you envision is to come?
Yeah, I mean, I think the common theme that everyone is talking about is remote work is going to become more and more prominent, and that's already happening. A lot of that had begun before, but now COVID has only accelerated that. So while it's tough on a lot of people, right, I think globally organizations would become more open to the idea of remote work, and there'll be better support around it. But I think a huge, what that segues into is, if you look at growth talent, right, and I'm not talking about creative talent that's more customer facing, say design or user research, but growth talent is very analytical, very data driven. And I would say it's way more universal than talent available locally. So for example, in my previous work and my work right now, we consistently build out individual teams or contractors in Eastern Europe just to gain advantage from, and why would I pay someone $200 an hour here when I can pay a quarter of that price elsewhere? So I think this is the opportunity to build that muscle, like try to find talent that's more universal, because growth by nature is very data driven and technical, and you can find some really smart, hungry, knowledgeable growth people across the world. So this is your opportunity. Go dig into Upwork, try and find who these people are, join some of the growth communities to find these diamonds in the rough. And if you can, then that would allow you to scale your growth programs on a sustainable basis at much cheaper cost. What this also means then, as I mentioned, you can't move the customer facing teams away from the geography, but in a world where everyone is in their home, customer facing teams in the geography are not way more useful than customer teams that are in a different time zone if there's flexibility around it. So from that perspective, I think there'll be a shift from indexing heavily on qualitative research to more quantitative testing, where if you can't talk to your customers right now, the next best thing you can do right now is create landing page and drive some traffic to those landing page and learn about what is it that the customer desires, because you don't have the affordance to spend hours and hours talking to customers. So I think people will have to find ways of getting things done in the remote environment, and that's where A/B testing will become more prominent. Remote growth talent will become prominent. If you're in a sales-heavy business where you have so far relied a lot on physical meetings to drive your business, you'll have to move towards webinars. You'll have to create events like this to engage community. You will have to you will have to do demos that you have not done before. So all of those things are going to move. So think about all the things you were doing in the physical world now and try and find a remote equivalent, and that's perhaps going to stick.
It's really interesting. I mean, it's something that we are constantly pushing to our founders and executive contacts when they're looking about scaling up, and just the importance of branching outside of just looking at your local market, but actually looking at global talent. And it really does open up a whole new world for people if they sort of broaden their thinking around how they can find talent as well. And so what's your advice to early stage founders whose businesses have been directly impacted by COVID-19, which has meant that revenue is completely stopped? I know I've spoken to a lot recently that are feeling very stuck at the moment. Do you have any advice on how to get unstuck and have new focus?
I mean, a lot of what we have talked about in this call is trying to act on things that may not be driving revenue in the short term, but would be really helpful in the long term. And just because, say, you can't drive your car right now doesn't mean you don't get to work on it. Like, this is the opportunity to make it better, so then when the market opens up, you can be at an advantage. So the worst thing one can do right now is not act. Like, if you can't act towards revenue, act towards building something that will unlock revenue in the future. And having said that though, right, like if you are a business that has been impacted by COVID, let's bucket you down into maybe two or three buckets, right? Like, let's talk about the first one. If you are in a space that's actually seeing a lift, this is the time for you to, and this is not the exact question you asked, Sarah, but I think it's important to discuss this. The marketing costs right now is all-time low, like the cheapest I have seen in the last 3 years of managing Facebook. So if you are in a business that is actually benefiting from COVID and your revenues have seen growth, this is the time for you to spend a lot of money that you can, go for the kill and increase your revenue as much as possible. But that is most likely not the scenario. So
it's
then
the
comes
what everyone is saying.
So then comes the next part, right? Even if you can't book revenue right now, are you financed appropriately? If you're financed properly, I mean, everyone would say save burn, so you should be saving burn, but you should be also building capacity where you can. So if you're financed properly, the media costs are cheap, people are at home, figure out what can you do to front load demand. So what I mean by that, like spend in building a mailing list that you can then monetize when you open up for sales. We have used this tactic so many times and in my previous companies, because we would have an inventory shortfall or we'll sell out. And then what we do is, do we stop marketing? No. Just because we can't service our customers right now, you should take advantage of the cheap advertising cost, build a ton of your mailing list, and then when the market opens up again, open with a bang. Like one of the companies I'm advising here, It's a localized healthcare provider. So they have clinics across the country, and their clinics, and it's not in the essential health category, right? It's more in the wellness realm. So their clinics are closed, but that's not stopping them. They are appropriately funded. So we are going really heavy on building local awareness and driving email signups so that when they open up, they can almost trickle leads on a daily basis to ensure that their business so the supply is met with adequate demand on a daily basis and the centers are completely full. So if you can spend that money, spend it now and really try and get ahead of all your competitors out there. And then there's a third bucket where you feel you do not have enough funding, so you want to be extremely mindful about what you can do. And in that situation, go back to being extremely lean, extremely scrappy, try and find talent elsewhere across the world that may be cheaper, lean heavy on your current community, and focus on building the right product features that's going to accelerate your business when you launch.
I like that you touched on the PR as well as a non-spending example, because I think it's something that people don't or take for granted almost because it's not as measurable as using paid channels, but it is something that can have a really strong impact and costs next to nothing. And, you know, if founders or marketing managers want to upskill themselves, it's something that can be taught really early in terms of pitching to the media and while people are at home. I think it's a great channel to be utilizing free of cost to get your brand out there.
And PR or community engagement, right? Doesn't have to be a sob story. It doesn't have to be that we are sorry COVID has hit everyone and blah, blah, blah. No, it can be a fun take on a product. Like, I don't know how many of you guys are active on Twitter, but one of the things that was being discussed actively on Twitter in the last few weeks was there's this design company called Figma. They help you create wireframes. And they basically created a map of San Francisco where startups can start plotting their offices and then identifying where do their customers live. Like, so they made an interactive map that the crowd was going towards and really engaging with each other. And think about like a Silicon Valley, the show that you see, and then the introduction map where you have all the different companies coming up on San Francisco map. That's exactly what the community is trying to create there. So your engagement doesn't have to be like a sad, morbid story. It can be a fun take. Like, people are in their homes. They need things to keep themselves occupied. So you can think about it in alternate ways as well.
Great. And we've got a question here from Michelle. Gaurav, how have you gone about setting growth targets for startups?
It's a great question, Michelle. May I know what's your company about, if you can share that?
We'll just give her a minute. Hi, Michelle. We'll just pull you up for a minute. Oh, we've got you here. Great. Online retail, Gaurav?
Online retail, interesting. Yeah, I think there are so many ways of setting up these targets, right? There's a really good article, and I have to see who wrote it. But so there's a bunch of VCs who compared, if you're in the consumer vertical, what growth rate, like what year-on-year growth rate would give you. Actually, if you just give me a minute, I'll find that article. That's one of the best articles I've read. So you know what would be exciting to investors. And by the way, all of this conversation is in, if you are a business that's not funded by venture capital and you don't care about venture capital, then the rule of the game would be very different. But if you're a business that's funded by venture capitalists, then you will really have to push for sustained growth. Right now, that wasn't the mantra before. Everyone was going after aggressive growth. Think about WeWork. Now everyone wants to go after sustained growth. But let me try and see if I can find the article right now. If not, Sarah, I'll reach out to you later on. But
we can get it sent out to everyone. That's fine. Just on that point, which was really interesting, could you elaborate for us the difference in how businesses should be thinking about growth, VC versus independent?
Yeah.
Or bootstrap?
Let me quickly answer Michelle's question, assuming she's asking
Yeah, sorry.
about from a VC perspective. And then I think, Sarah, what you're touching upon is a bigger question, which I think is much more appropriate right now. So traditionally, growth has always been seen as what is your, like, each industry would have its own metric, but generally what everyone has viewed it as, what's your like, if you're a social network, what's your subscriber base, what's your user base, if you're a marketplace company, what's your GMV, if you're an e-commerce brand, it's seen as how much revenue are you doing. But traditionally, it's been a metric that is a representation of what's your top line revenue, right? And for each stage of the startup where you are at, there are benchmarks. So if you happen to be in the SaaS category for Series A, there's a certain amount of revenue that qualifies you for the next round of fundraise. The problem with this approach is it doesn't take in. So Michelle, I'll share the article later on. It has got the benchmarks. So you know that if you're a SaaS company at Series A, doing say 4 million in revenue, where does it put you against? Would that put you in the top quartile or the bottom quartile or some quartile in the middle, or would it put you into the top 10 decile, or would it put you into the top 90%, or so on? So it's important that you look through that article to identify benchmarks. Now, all of that was relevant before this year, where aggressive growth was the mantra. Right now, I think the way to look about growth is sustained, repeatable growth. So what do I mean by that, right? LTV to CAC is what you should be optimizing for. And when I say that, LTV, I've seen a lot of really bad practices around the word LTV, because lifetime can be 10 years. So you lose money for the first 9 years, and then on the 10th year, you start making money back. So your growth target should be around what's your LTV to CAC, assuming your payback. Each business has its own share of this, but you should also be looking at payback window. You should not just be looking at LTV to CAC, you should be looking at payback window. And your payback window on that customer should be within 6 months to 1 year. Now, of course, if you happen to be in a business where payback comes in later, that's fine too. But it's really important that you focus on payback, number one. What that means is, when you make your annual P&L, your contribution margin is what VCs are going to look at, not just your gross revenue. And contribution margin would be gross revenue minus COGS minus CAC. So it's really important that you optimize for gross revenue and contribution margin together, and not focus on just the gross revenue, which is a huge shift from where entrepreneurs were in the last 2 to 3 years. So it's really important that you focus on contribution margin. And one way of doing that is to watch LTV to CAC like a hawk. And your LTV to CAC should be above 3, and your payback should be within 6 months. If you're hitting those metrics, then you know that you have something that is not a cash sinking machine, but you have something where if you invest $1, you get money back. And that's a great position for you to be in, because it means that as an investor, if I look at your business, I see a healthy cash flow, and I'll be more likely to invest in it, because it feels like the right investment. Your basics are in place.
Great.
In fact, Sarah, on this one, David Sachs, who was an ex-PayPal mafia, more recently, then he founded Yammer, blah, blah, blah. He did a bunch of different things, and now he's an investor. He wrote a really good article on this, I think 2 days ago, where he talks about a metric that each startup should be tracking to, and it's essentially your revenue over burn. And if your burn rate, and I'll share that article too. So that's already 2 articles that I owe the group.
Yeah, great. We'll share that with everyone. And I'm just going to bring Zway into the hot seat. Zway's head of digital marketing at Sendle.
Oh, very cool. Hi, Sway.
Hang on, he's just...
Hey guys, how's it going?
So far, so good. Sway. How are you?
And did you have a question?
No, sorry, I think I accidentally put that one up, but I've been listening very intently.
No worries.
How are you seeing the CPMs in your business?
I think it's been a really interesting time. Look, we're very blessed to be in this opportunity where our business hasn't been terribly affected or virtually ground to zero. I think the demand has been great for logistics, as you've seen. E-commerce has definitely done very well. There's been some really great stats that have been shared publicly, by Shopify's CTO, just showing the sheer demand in market at the moment. So I think again we're super lucky to be in this position, and kind of like what you said earlier, we're seeing reduced CPMs on Facebook, just given that we got some really great stats. Really, Facebook was saying the screen time was up. I don't recall the exact percentage, but considerably up, just due to people being at home and using it a lot more. Plus the reduction in advertisers, so it's been really great for us.
Yeah.
Have you guys stayed consistent with your spend, Sway, or have you pulled back? Have you changed anything during this time?
Yeah, we've had to pull back a bit. I think we've just taken a more cautious approach. These are pretty uncertain times for a lot of businesses, including ours, and I think just putting just a more cautious approach has been the best choice for us at this point in time.
Mm-hmm, mm-hmm. That
Great.
makes sense.
Thanks, Sway.
Yeah, sorry for interrupting.
No, don't. Anyone else wants to join in or have questions, please raise your hand. So yeah, you were also talking about the difference with growth with VC-backed businesses versus bootstrapped.
Yeah. Well, I think if you are a bootstrap business, right, then you don't really care about the vanity metrics as much. What you really, in a VC-based business, you try to shoot for growth and rapid growth, and you are willing to make inefficient capital decisions to really go for growth. If you are a bootstrap business, you don't have that luxury because you ultimately have a set amount of capital that's available to you. So you try to do things in a more scrappy manner. That means your capital is used way more efficiently, and you try to take small steps to get towards the big goal instead of trying to hit the hockey stick very quickly. And I think if you are a small business right now, what you should be really trying to do is, or if you're trying to run a small business, right, then you're not really shooting for a vanity revenue metric that you want to get in front of VCs with. So, and you're not shooting for world domination. So the idea then would be for you to build your business in a sustainable fashion, so your profit margin becomes actually a more important or an equally important metric as your gross revenue. If you are a VC funded business, then of course gross revenue becomes more important than profitability.
Great. We're getting to the tail end, guys. So if anyone does have any questions or things that they think Gaurav might be able to help with their current business challenges, or wants to jump in and share any stories, please raise your hand, and happy to sort of bring you in on the conversation. Gaurav, as we sort of get closer to wrapping up, is there any other anything else that basically can help businesses here in Australia that you're learning from what's happening over in the States? Any other successes or case studies that are worth sharing?
I think the interesting thing about what's happening right now is there's a lot of unpredictability, at least in the US, on what's going to happen or when are things going to improve. And you should, in that scenario, be really planning for the worst. But having said that, you should be prepared to take opportunity whenever the market opens up. Even the first mover among all the competitors is going to have an edge, because everyone would be struggling to get back into action. So how do you do that, right? I think it's a lot of ironies right now, and that's one. Like how do you stay put, but still be ready to launch quickly as soon as the markets open? That's one. And it's not an easy one to navigate, but I think it's going to be important. So if you had to furlough people, if you had to let go of core people, how do you hire people quickly? Like, it's really important that you think about what would the world look like when the market opens and prepare for that. And again, that could mean features or leads or email list, but that can also mean like key resources that you did not have access to right now, but you will have access to in the future. So think about those things right now, because when the market opens up, you do not want to be slowed down by lack of preparation. And just because the market, you don't know when the market would open, doesn't mean you don't prepare, you don't have that preparation right now. So it's really important that you try and use your time wisely now, build, and as we have discussed, like try and focus on what you can do. But a huge part of what you can do right now is also prepare for when the market opens, you can sprint and you can catch up on some of the lost time.
Yeah. And as someone that does a lot of work on people and culture, I think it's really important to hone in the whole culture piece of internally with your staff. And I think even when you think about growth, like you can be pulling lots of great stories out of that and just making sure that you're repeating what you're, the same customer experience as always, even during these times, is what's going to really set you apart from your competitors for the future.
Yep.
So thank you so much. It's been really good. Oh, sorry, I've got another question here, so maybe we'll touch on it quickly.
Yeah,
So
let's go ahead.
Given your extensive experience in startups, what's your top tips on what not to do? We did touch on this, didn't we, last night?
If I may, what's your company about, and who's the person asking the question?
It's Michelle Bray, and it's online retail.
Online retail. I think there are so many mistakes that startups make, and they can be in multiple different areas, right? Like on the product side, the mistake that people make is they don't pay attention to the customer enough, right? And they just build what they want to build. On the marketing side, I've seen a very similar mistake where people don't pay attention to what the customers want to hear, but they focus a lot more on what they want to say. But if I had to encapsulate all of the different learnings I've had across product, marketing, et cetera, fundraising, I would distill it to maybe the first insight is don't drink too much of your own Kool-Aid. So that's really, really important. That, yes, I mean, be ambitious, but keep a health, don't increase the gap between what you promise versus what you can really do. What you should always be faking it till you make it, but don't try and drink too much of your own Kool-Aid where you lose touch with the ground reality. That's number one. Second, I think startups are big trust vehicles. I have seen startups crumble in front of my eyes because of founder disputes. So it's really important to have a culture of high trust, vulnerability, collaboration from the get-go, because as your companies start expanding, the early team members propagate what they know to be true, and their culture propagates into your 50th employee, and then the first 50 employees would propagate their culture into the 100th employee. So really, it's important to think actively about your values early on, because people becomes the biggest choke point in any startup. Like, I think there's a saying, culture eats strategy for breakfast. So that is indeed true, because once you hit that 50 people, 60 people mark, you start realizing that your work is going to lead through influence, and you really need the people that you hire to be able to do the work. So if you don't have a solid culture with really good values in place, you will struggle to scale. And then third, profit is the king. Revenue, at least from a growth leader or from a growth person who believes in building sustainable businesses, it's really important that you watch out for profits and you don't just focus on revenue. So these are the three things that are going to be extremely crucial in how you scale your business. And profit, by the way, is a catch-all phrase for the right customer experience, the right margin, the CAC. But at the end of the day, right, if you're able to acquire customers at a lower CAC, sell them on a high AOV, average order value, and run all of this at a healthy margin, you will profit. So profit is more important and more holistic than revenue.
And Zway, if I may bring you back in just one last time, I think Sendal is a really great case study to elaborate on what Gaurav was talking about in regards to values. Hopefully he's still there. Yeah.
I am still here.
regards to company values, did you want to tell everyone about Sendles and how that applies?
I think, yeah, Sendle is really a really interesting startup, and I've worked in startup my entire career, but probably the business that I see that's really put people first ahead of everything. And it's really been instilled by our CEO, James Chinmoody. And I think, it really goes back to the start of the business where, you know, being a B Corp has really been a core kind of fundamental part about the way that we treat people and the way that we want to go about doing business as well. And, it's things like being very green first and eco-friendly, and just being very conscious of the environment. And we surround ourselves with people that I think are really, really believes in those things as well. And it's really just fundamental to the way that we do work.
Yeah, and it's just interesting because it's such a diverse team, but they all really do have those core values, and they call it the 5 H's, which is happy, high performance, honest,
Humble.
What's the last one?
Hungry. Did you say hungry?
Yeah. They have actually written very deep analysis on what these mean, and when they do interview people, they interview them based on the values, and it's something that has been really critical to their success, and the culture is fantastic. And I spent some time working on site with them, and it was a really amazing experience, and the business is doing a really good job at that. So sorry to put you in the hot seat again, Sway, but thought I'd throw you in there again.
Anytime.
And so we do have a question from Kim. So she's just asking, how long do you think the window is for being able to take advantage of the opportunities around the pandemic? Do you think there's a paradigm change, particularly around data, is permanent, or permanent as anything can be?
Can you repeat the later half of the question? Like what's the question around that?
The paradigm change around data is a permanent thing.
Paradigm change around data. Is that correct? Am I understanding the question correct? Like,
yeah.
What businesses came in? Kim, what's your company about?
Sorry, it's my fault. Kim, I'm going to put you in the hot seat if you don't mind.
Hello.
Hello.
Hi, Kim.
Yeah, so essentially, at this stage, what the pandemic has done is made it very, very clear that data needs to be able to be brought together, and data rather than systems need to be brought together in a way that is simple, secure, compliant, and accessible to the majority world rather than to just the top 1%. And we've created a piece of technology that enables that. It's been 11 years in development. And for 11 years, we've been explaining to people, there's going to come a time when you're really going to have to be doing this. And they thought we were crazy. And then, you know how they talk about there needs to be a compelling event? Well, here's the compelling event. My question is, do you think that this awareness will be something that is permanent, or do you see people essentially going back to seeing the utilization of data in this way as a need to have, rather, or as going back to being a want to have rather than a need to have?
No, I think we've entered the need paradigm. What I mean by that is the rate at which data is being consumed right now. It's because COVID has actually accelerated the digital transformation in so many different ways. What I mean by that, right? Like in terms of the bottom half of the pyramid or the lower end of the pyramid, people in developing countries having to stay home, but they're still digitally connected.
Yeah.
It has governance to the digital paradigm. When you look at manufacturing and operational processes, automation is happening. So if at all, COVID has only accelerated trends that are very intensive around data. And I think what companies would very quickly realize is data can provide efficiency, and data can provide different engagement paradigms. So it's going to stay. The next thing to also note is with regards to democratizing data, right? One thing we have all learned is how poorly equipped the developed world was, specifically around COVID. And and countries like I would call Korea a developed country, but Korea, Taiwan were able to move much faster and control the situation just because they had better control systems and driven through data in place, and they had better information hierarchies. So I think with regards to that, right, people are only waking up to the idea that there are invisible terrors or there are invisible threats to the economy, COVID being one of them. And I think there's going to be a higher desire across the world now to be more prepared for things like this, which would need more streamlined information hierarchies, uh, ex, uh, democratization of data at a massive scale. And it's almost would be mandated by the different institutions. So yeah, I mean, that's just my take. I am by no means a data expert, but yeah, I think it has accelerated a few trends, and it's almost become imperative because the next COVID would be something that no one would have expected. It would be a black swan event, but you would need the right informational hierarchies to be able to navigate that quickly.
Thank you.
Thanks, Kim. And there is also, for those that have read Homo Sapiens, he does have a follow-up book called Homo Deus, and actually at the end of it, he starts talking about the future for us and all of this and algorithms and data, and that is in it, and it's very, very interesting. So do highly recommend it. Cool. Well, we are getting to... Okay, cool. I was just checking there wasn't any other questions, but we'll definitely pass on the reading material to you all that Gaurav has recommended for this. I mean, I think we've covered a lot of grounds, and you've come up with some, given us some really interesting things to think about. Thank you so much. It's very late. It's 12 a.m. for you now in LA, so in San Fran, sorry. So we really do appreciate you taking the time to speak with us.
Thank you for having me, and thank you everyone for making time. I really appreciate you carving out this time. Thank you.
Thanks, everyone.
Thank you. Bye.